Today, I'm going to tell you why I'm getting out of the market. It's a crash, man. This is no joking. You got to get out or lose 20% in my mind. Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey, everybody. I don't mean to be such a downer, but sometimes reality forces you to conclusions you don't want to come to. And I've concluded that the risk of this market is not worth hanging in there for now. There'll be plenty of time to jump back in if it makes a definitive move upwards. Okay? And I think there's an easy way to tell that. And it's the two biggest great companies. Apple should be closer to 200. It's in the 130s. Okay, I would not consider getting back in until Apple goes over 150, preferably 160. Okay, Tesla, I would not consider getting back in until it goes over 750. It's not even making 700 at the time I'm recording this. So it's like 696 or something ridiculous. So if great companies like this that have had good reports are having this much trouble, the future is looking pretty dim. From people analyzing this. And I see people putting out videos where they're analyzing the general trend of the market. Believe me, the general trend and longer term and midterm trends are down. You get these bear rallies, and I think that's all we've been getting is bear rallies. Or there's some people that think they're buying the dip. You're not buying the dip, you're buying a crash. And this looks to be as bad or worse than any of the crashes I've been in. I think we have another 20% to go from the way it's acting. There's an easy way to tell if we're out of the woods. Okay, if the market goes down significantly and the VIX goes over 40, the VIX, the VIX, is a measure of market volatility, and it tends to get higher in bear markets. And if it gets into the 40s, that means people have thrown up their hands and said, I'm getting out. It's called capitulation. You capitulate to the obvious, which people haven't been doing, and people are very hopeful, but I think they're going to get burned, and I just won't allow myself to get burned like that. And that's my opinion, and this is not financial advice. You do what you think is right for you. After being through this game, serious crashes 6 or more times. I can't even count them all since the late 1970s. You know, I was a teenager in the 70s. You know, I mean, early 20s, I guess, too. And man, the inflation is just out of this world. Last month, May's inflation rate from the previous month, it went up 1% in a month. Okay. And then you have the official rate come out. Oh, it's 8.6%. But that is such a doctored figure. They don't really realistically take into account the cost of rent. Groceries and gas, they don't make that part of the core. The two things you need to live, they don't make part of the core. How that is not core inflation? Do you not need to buy groceries and gas? You know, and it affects things even if you don't drive. I mean, everything's delivered by diesel and gas cars and trucks and so forth. So the latest year-to-year inflation measurement is 8.6%, but because of they call it the CPI lie, the CPI, because they doctor the figures so badly, it doesn't really take into account of the real inflation. You can add at least 5% to it. In other words, in my mind, inflation is over 13%. I noticed my grocery bill since pre-pandemic, let's call it, has increased 25%, and I'm sure you've encountered the same thing. So they can tell us what they want with these figures. The Fed has indicated they're going to increase interest rates 0.5%, a half a percentage point for the next two meetings in this June and July. And they'll probably keep doing that until September. But I don't think they're going to stop. I think they're going to be forced to continue. Unless the stock market truly crashes. I mean, that's partly what has to happen. The market has to truly capitulate. The VIX, the measure of volatility, the VIX, has to go into the 40s. People have to throw their hands up and say, I'm getting out for now. And then get back in at a closer thing to the bottom when there's actually some major positive news. And that would be news like the war in Ukraine is ending, which would be so good for the world. Also, I should mention the Fed is reducing its balance sheet. All the things they buy bonds mainly of companies to support. That's a way of injecting money into the economy. They buy the bonds, the companies get money, and they would buy anything pretty much to keep everything afloat. And they're going to be reducing their balance sheet. And when they reduce their balance sheet, that means that money gets taken out of the economy because people give money to the Fed to get the bonds or something like that. Anyway, its effect is to increase the interest rate, and that will raise the interest rate a quarter of a percentage points, a couple times probably. So we've got guaranteed increase inflation rates. This is the opposite of what happened in 2020. In early 2020, the Fed more or less promised we will not let the market go down. Okay. And now they are promising we will not let the market go up because they want to reduce that expectation effect. They want to reduce people's expectations of inflation, which actually can cause inflation. And one of the ways to do that is get rid of the wealth effect. And if you crash the market, people are not buying cars and houses, which inflates the economy. And so it takes money out of the economy. And so it has a deflating effect. And they're hoping to do it softly. But I think they've let it go on for far too long. And the days of being soft on this, I think, are over. And I think we're in for a moderate recession, at least, I think. I'm going to short using the SQQQ. The QQQ is the 100 largest companies on the NASDAQ. And the SQQ is triple leverage on shorting the QQQ. In other words, for every dollar that the QQQ goes down, you get $3. And I've had such good luck with this, and I've watched it, and I think it's the best. It's the best overall general shorting of an index. I think that's been working. I compare it to other indexes, and if you look at it for the past couple months, even it's far outdone the other ways of shorting the indexes. Another discouraging thing and a major sign that things are not going. This is not 2020, folks. This is the opposite of 2020. Okay. I think another major sign was Amazon split its shares, and it split it 20-1. You get 20 shares for every one share of Amazon that you own. Okay, and usually that's a very bullish effect. It increases the price of it in the next few days, usually, because people that couldn't afford a share before could now buy shares. And so, but that was so discouraging. I think it reduced, when they split it, the shares went from 2,000 and some down to 125. Well, right now they're in the low 100s. in a couple days after a 20-to-1 split. Oh man, you don't have to be a major in-depth analyst to see this stuff. All you have to be able to see is to see the writing on the wall, and the writing is on the wall. It's crash time. It's time for me to get out. This is not advice to you. This is what I'm doing. And on top of that, I'm going to get rid of the few stocks I own, but I'm going to go back to shorting. Of course, I got to play that day by day because you can get these wild bear rallies. And if we get one of those, it'll be a wild bear rally. And oh, yeah, it's over. And people buy in again. And then it's going to crash down. And the more it goes up, the harder it's going to go back down. And it's showing resistance at 4,000. And now it's at 3,900 and some. I think if it goes up, let's say it goes up to 42, 43, let's say 4,500, let's shoot the moon. I think it's just going to go down and crash twice as worse if it does that. We've got to have capitulation. We've got to see the VIX go into the 40s. And with that, I wish you the best. Thanks for listening and watching. Be sure to like and subscribe. Comment if you need to set me straight, as I may need some setting straight. This whole market may need some setting straight in my mind, but I don't think so. I've seen this rodeo. I've been through this rodeo too many times to ignore it now. And I've got to be true to myself. I got to be me. I got to be free. And so I will try to relax now and take it easy. And good luck to us all.